I'm super excited. It was really tough. It was fun. I enjoyed it. It was definitely a different ball game, but I had a blast. So thank you.
All right, guys. Well, welcome. We are in the middle of the hardest market I have ever traded. Since I opened my public portfolio a few years ago, for the most part, crypto, especially altcoins, which is what we trade here on this channel, have gone downwards to sideways, excluding a few months between October of last year and March of this year. So, missing out on any of those months while we were pumping was very detrimental to traders. Today, I want to talk about where this market will continue to go. And I also want to talk a bit more about our 50-week moving average and what it means for us, why we should be watching that particular moving average. Okay, so I'm going to jump straight to the Bitcoin chart this week. We will briefly touch on the DXY, the dollar, VIX, and the SPY, which we are using to track the markets and how that plays an impact on Bitcoin. But first, I want to start off here on the Bitcoin chart. You guys that have been following me know that we are currently in this channel, this descending channel, which is bullish. And as of yesterday and today, we have reached the bottom side of this channel. It is holding us for support. A few days ago, I put out our levels on Bitcoin to watch for support. The first level was 54,000, which was basically the bottom of our channel here. The second level was our 50-week moving average, which was somewhere at that time, it was somewhere around, I want to say 53.3. So I put that out as a level. That is a very significant level. And below that, we have our neckline at 48.4K. Now, what is that neckline I refer to? I've covered this many times in the past, but we'll review it again. The neckline is right here, this horizontal level from a larger inverse head and shoulders pattern, which is currently playing out. And this neckline has not yet been retested. Oftentimes, when we see significant levels like this, price does come back to retest that level. Now here is, when we had that flash crash with the Japanese carry trade and it affected the crypto market, we did have a quick wick down to around 49,000, but we didn't quite touch our neckline at 48.4. So the question remains, will price come down here and retest this neckline? We don't know that yet. But I do believe that our 50-week moving average is going to hold us for support. Of course, we wicked down and touched that yesterday. And I want to talk about the significance of the 50-week moving average. So I'm going to zoom out here to our weekly chart, and maybe I'll get rid of a few of these drawings. All right, there we go. So really what I want to talk about with this 50-week moving average is bear cycles versus bull cycles. It seems to me as I look at this chart, I brought to your attention this 50-week moving average a couple of posts ago. And then I started looking back on the chart and I realized how significant this 50-week moving average is for determining whether we are in a bull market or bear market. So it seems that every time we pop above this 50-week moving average, that is the beginning of a bull cycle. And anytime we drop below it, that is the beginning of a bear cycle. And really, it's quite simple. It's quite that simple. There may be an exception here with the COVID crisis where we dropped down, panic sold, and then it took a few weeks, but then we came back above that again and started another bull run. But that's the only really exception that I see in this chart. Otherwise, anytime we're below it, we're in a bear market, and anytime we're above it, we're in a bull market. And it's really that simple. So now we are facing that 50-week moving average again. And the question is, will that 50-week moving average hold us as support? And of course, I am betting that it will, but I know there are a lot of bears coming out of the woodwork again, and saying that we're entering into a bear market. I don't think we're quite there yet. But of course, that all remains to be seen, as we have just touched that 50-week moving average again, and bounced a little bit, but the bounce was somewhat underwhelming. Anyways, I wanted to bring the 50-week moving average to your attention because of the significance of what it's telling us about bull and bear markets. And you can go back in price history and see that it really does continue to reflect the cycle which we're in. And so far we are in a bull cycle, as we've remained above that 50-week moving average pretty much since March of 2023. And that's when we popped above it, and we've remained above it ever since then. The big question again is, will this hold for us for a little bit longer? Altcoins really have not had the bull cycle that we've seen in past, and many of us are banking on an altcoin bull cycle. For us to have that, quite honestly, Bitcoin has to bounce in this channel and head towards the top of the channel again, and then eventually we're hoping to break that. Of course, my year-end projection still remains 88 to 92,000 is where I think Bitcoin will end up at the end of the year. So it is we're closing in on time, guys, and this is the real test here, this 50-week moving average. So guys, I want you to draw this on your chart. Now, if you want to put it on the daily chart, then what you're going to need to do is for 50 weeks, that's 350 days. So you're going to need to stick a 350-day moving average on your daily chart. So on my daily chart here, the 350-day moving average is exemplified in orange. And you can see it is moving up to help us out here at the bottom of this channel. So we have two areas of support, a big area of confluence, the bottom of this channel, along with the 50-week moving average. And that's why right now I'm not leaning towards coming down and touching that 48,400 neckline. Especially since we already had this wick down, which almost touched 48,400. I think the bottom of this channel is going to hold, and along with this 50-week moving average, and we're going to see a jump up here shortly, and I'm hoping that this will be the end of this channel and we break to the upside, as we are drawing close to the end of the year here. So to get to 88, 92,000, we really have to start moving up again. All right, let's jump to the dollar. And what I'm seeing here has definitely, I mean, the dollar has reacted exactly as I expected, minus the fact I thought we would come up and maybe touch this, the underside of this pink trend line. So dollar is even weaker than I expected, meaning that I think unless we bounce again off of this 100 level, we're going to break through this 100 level and go all the way down here to our trend line, which if I zoom out to the weekly here, you can see this comes all the way back. From way back, I got to put the chart in auto mode here so it fits on here. This comes all the way back from, well, we touched here in the 2001, but actually it was drawn from 1984. That's the first time. Yep, 84 is the first time we touched it, and touched it here on a gap, and then here again in 2001, here again in 2002, and the dollar really remained on the underside of that until most recently. I think we're gonna drop back down and probably touch that again here very soon. All right, so that is the deal on the dollar. Of course, with weakness on the dollar, that only supports my thesis that a blow-off top in the market will continue. Now, you guys know that I am 50% out of the market right now. Sold right here at 560 the first time, bought back at 520, sold again at around 550, and once we touch this pink trend line or get near it, I'm going to start dollar cost averaging back in that 50% that I have sitting on the sidelines. Now, there is a 200-day moving average. I need to get those on the chart. 1 second. All right, so I've got all my major moving averages on the chart. 50 is up here. We're below that right now. We've got the 100-day moving average moving up to support us right at that pink trend line, which is the neckline of a larger cup and handle pattern. You guys know I've talked about this, and it is possible the 200-day moving average at in red here. It is possible we break down below that neckline one more time without confirmation, and hit that, wick down to that 200-day moving average and kiss that one more time before we take off. Of course, my projection on SPY has changed. Previous target was here at 570. I almost nailed that perfectly, and you can see the double top. We've almost touched that target twice now. And then I spotted this cup and handle pattern. Really on the bi-weekly is the more accurate chart. So if you want to draw that out on a bi-weekly, and you can see projection there, or target, takes us from anywhere from 650 SPY to 700. And I think we'll get close to that by the end of the year. Okay, one last thing here. Let's take a look at gold just very quickly. Reached our target. Still haven't dropped out of that bearish ascending triangle. When that happens, I think that is people taking their money out of gold, going back into the market one more time. It's going to be risk on, and that's when the market takes off. So the market takes off when we drop from that triangle on gold, and people move their cash over to risk on assets once more. All right, just a quick video on that, mainly that 350-day moving average, or 50-week, same thing. It's very important on the Bitcoin chart. So draw that out. I think we're getting close, guys. So don't exhaust yourself yet. We're almost there. Until the next video, peace, y'all.